Okay, short-term revolution people, I am super excited to have with me today Alvin Cavalier, who is the founder of Your Space, a turnkey Airbnb or short-term rental operation that he'll tell us all about. Welcome, Alvin.
Hi, thank you for having me on.
Would you want to just tell us, who you are, what you do, and then we'll get right into how you got into real estate and short-term rentals.
Okie dokie. Well, hey everyone. I'm Alvin. Go by Cav, sometimes Coach Cav. Don't do much coaching, but it rhymes and it sounds pretty cool, so we decided to stick with it. Real estate investor, primarily operating nowadays in the short-term rental space, where my company, Your Space, we've invested across both the US and Canada in over 140 short-term rentals plus sharing economy investments that include the likes of tiny homes, RVs, and Turo vehicles, and some event spaces that we take on through a site called PeerSpace. But we've been operating in a space for about 4 years, and we've touched a lot of markets, which gives us, in my opinion, a unique perspective and unique experiences to lend to investors and those looking to get started within the short-term rental community. So happy to be here and excited about providing some value to the platform and to you all with today's session.
That's awesome. Really, really glad that we were able to get you on. I love what you do with Your Space. But let's take a quick step back and just go over like how you got into short-term rentals and the shared economy world at large.
So my entrance into short-term rentals, I like to say I tripped on a rock, but it was by way of a friend who's a real estate agent in New York City, and she called just to catch up, and then the conversation bled into what they were doing with short-term rentals and Airbnb, and she said, hey, let me send you some numbers on what we're doing, and let me know if it's something you think you'd be interested in. So we fast forward, me looking at the data, a call back saying I'm in, and then we had to figure out how do we get creative with cash options to do this, right? And with my full-time job being in the military, we have this retirement program. It's similar to a 401k, but it's called the TSP, right? So it's along the lines here of borrowing other people's money to fund investments or leverage in this case, and that's exactly what I did. I went into my TSP. I took out I think about 22 grand or so and invested into my first Airbnb. And then it just snowballed from there. The profits from one led me to pulling in another business to do it. And then we pulled in another business partner to do a third, all in New York City. And then we started to move down the East Coast with our operations.
Nice. So what cities are you in now? I feel like that's like opening a can of worms, but just give us an idea.
Yeah, we're in over 25 or so different markets, again, across both the US and Canada, from Olympia, Washington, Netherlands, and Tampa, Florida, and in the Newark, New Jersey area still running short-term rental. So.
Okay, we'll definitely talk a little more about those locations. But now, how did you when and how did you make the transition, or should I say add on the other, because for a lot of people, when they think of, short-term rentals, they're thinking just Airbnb, VRBO, like the short-term, vacation renters type space. At what point did you add on the other shared economy facets, should I say, Turo and Peerspace, for example?
Yeah, great question. So that came after we were about 20, maybe 30 properties in, and operated for about a year and a half. What we started to look at was, or sought to understand, was the sharing economy as a whole. And then the question was, how do we get highest and best use out of any home that we have, and turn that home into a multi-purpose space that operates within the confines of the sharing economy. So once we went out and started to understand all the different services that existed in the sharing economy, we singled out a few that were relatively easy to incorporate into a home, with Peerspace being our number one choice. Peerspace is an event-based platform similar to Airbnb, but more specifically for events. The unique aspect of Peerspace is Peerspace allows you to operate that event-based service from the same home that you're running an Airbnb from. So if they're married together, right, you can't have on Insta bookings for competing against each other, your space. But if they're married together, well, you can have your calendar and your time set for Peerspace bookings, either on high occupancy weekends or during the days, on slower days during the week, where you can take in a couple hours on Peerspace and then potentially still have the calendar available for Airbnb guests later in the afternoon. Now, when we start talking Peerspace and its integration with Airbnb, that's never a factor in going into a home, because we want the profit margins to be driven strictly on the short-term rental side. But the advantage from a profit margin standpoint, when you're able to incorporate Peerspace, then as you take in Peerspace income, since you never counted on it in the first place, in most cases, it helps increase your overall profit margin goals for that particular property. But it has been a game changer, and it's changed the way we've looked for homes to use as short-term rentals, and certainly change the way we operate day to day with having the capacity to use Peerspace also.
Okay. And can you give us, like, in terms of numbers, what like a booking on Peerspace can look like versus one on Airbnb, say overnight? Like, how do they compare?
Right, great question. So Peerspace rents by the hour, and in most cases, depending on the type of event that you're hosting, whether it's a photo shoot or whether you have a chef that's hosting a brunch. I'll pull up a picture here shortly to show what we did in one occasion. But because you rent it by the hour, you have the capacity to set a limited amount of hours. For example, you can't rent the space for no less than 4 hours. If you have a price point set at, let's just say $200 to be modest, and you have a 4-hour minimum, you've made a little bit over $800 with the cleaning fee in just 4 hours. So if we compare that to a short-term rental that may book for, let's just say, $150 a night, and you've got a 24-hour period that you've got guests versus 4 hours, then the choice then becomes very clear in terms of when you start to look at RevPAR and some of those other metrics. The choice becomes clear on where you should start to look to leverage the space.
Yeah, the first day I got a peer space inquiry, I was like, whoa, why am I not doing this every why am I not doing this all the time? Now, for the units that you do have on PeerSpace, would you say that they're booked often? Like, does it ever actually get like do you get frequent bookings from PeerSpace, or is it just every now and then? But then when they come, they're big.
In bigger cities, like Atlanta, Houston, we get PeerSpace inquiries just about on a weekly basis.
Oh, good.
So then it becomes a calendar deconfliction through, just to make sure that we're getting, again, highest and best use, and we're taking the best available profit for that particular property. But in most cases, larger cities do very well when it comes to PeerSpace because of the number of events, small meetups that they host, as well as photo shoots for photographers.
Okay. Now, some people hear the word events and cringe because they think they'll come in, they'll tear up my house. I don't want events in my Airbnb. How do you de-risk that portion?
Yeah, well, the cool thing is PeerSpace's platform is built for events. So they have internally all of the check marks that help mitigate those risks within the platform. So once you come to understand how the platform's set up for highest and best use to service those events, then it becomes easy to allow those events to take place with the confidence that your place will be taken care of. But like I say, at the end of the day, with anybody, if there's a bad apple, then there's just a bad apple, right? Mm-hmm. You can put all the preventive measures in place that you want. If someone has bad intentions, regardless if they sign a I will not do this form, they have external insurance on their booking. If they want to go rogue and do something bad, then they will, right? Yeah. So the question from a business standpoint is never being too preventive to hosting folks, but how do you mitigate as much as possible? And then on the back end, right? Let's just say worst case scenario that did happen, you've got Airbnb guests checking in 2 hours. What's within your SOP that'll allow your cleaners and your team to take care of the issue, get it back up and running, so you're marketable for business.
Yeah. Now, just I'm following. I know you do some really creative things when it comes to finding and offering value in the market.
Mm-hmm.
You can go ahead actually with this.
Hey, let me share the screen.
Yeah.
I wanted to highlight what we did in Somerville, South Carolina, one weekend. So we had a local chef who hosted a brunch. That booking was through PeerSpace. It was a 4-hour minimum at $200 a night. That happened from 8 a.m. to 12 p.m. We took an hour to clean, and then we had a check-in at 4 p.m. for 12 guests. I believe it was a baseball team or a team coming in to play in a local tournament. Stayed for 3 nights at $350 a night. So when you put that together, as I say, when the stars align in a case like this, where you get 2 high profile bookings, that was a $3,000 weekend. Wow. And the value add through PeerSpace allowed that to happen. So that's why this becomes such a powerful multiplier when you start to think about highest and best use from a space.
And you mostly arbitrage your units, right?
Yes, 100% of our inventory are all what's considered arbitrage, where we master lease each place and then have permission, obviously, to sublet them for short-term rentals.
Yeah, because I know when I talk about arbitrage, sometimes I'm like, listen, guys, I know I did mine with like a 1-bedroom apartment, but you can really do this with much bigger properties. I'm glad that you're showing basically real life what this can look like when done well. Now, sorry, 1 second. So yeah, knowing what you can do like on Peerspace and all of this, like, what is your process for determining the value that, say, that a property can offer you? Because obviously you're doing more interesting things than the traditional short-term rental arbitrage operator.
Right. No, great question. So I think one of the unique things that we do, at least, you know, internally, is how we look at markets, and we start to think about the term value. Mm-hmm. And the lead into that is, right, value is simply, it's a business word, or, you know, it relates to how well businesses do based on what. And I always talk about with investors, you know, the story about Toys R Us and the story about Blockbuster movies, right? They were both industry leaders at some point that offered immense value to their customers at one point in time. Both those businesses eventually failed. And for whatever reasons behind the curtains, they failed. On the surface, they failed because they failed to offer the right value, or continue to offer the right value to their customers. So when we think about Airbnb and short-term rentals, we don't separate the two. So we keep things at a business level in terms of, hey, how do we understand what value is in the market? How do we understand what value gaps exist in the market? And then how do we segment that into essentially offering unique values, such as offering Peerspace in a home which doesn't allow us to compete. So the way we do that, and I'll share my screen here again. Let me know if you can see this chart. The chart showing for you. Okay, so what you're looking at here is a little tool that we built in-house that allows us to look at each market. This isn't the automated version, it's just a snapshot, but the intent is to show how we look at value, how we trace markets, and then segment that to value. So in the left-hand column, you'll see traveler demographics here. Traveler demographics are also referred to in some, you know, depending on who you ask, as a guest avatar. The difference here with how we look at traveler demographics is a family with kids is a traveler demographic. A family with kids and pets, a family with only pets, right? Because we know guests travel in those different subsets, so we have to separate those simply because they exist. We have to then understand, you know, what are the needs of those specific traveler demographics. So within this left-hand column, you'll see a ton of different traveler demographics that we look at across every market to then start to determine who's in the market. And then we go over to Airbnb and we simply look in the filters to start to determine what gaps exist in the market against those specific travel demographics. Now, in my example here, where I have my arrows pointing, number 6 says large groups. In most markets, we like to target larger homes because the head-to-bed ratio in most cases becomes the biggest factor in determining how much we can charge per night. And then with bigger homes, we typically have the Peerspace play. here. So we're always thinking about unique value in this issue, PeerSpace. But if you follow my arrow here, I'll walk through it. So in the Houston market, for example, and I'll pull up the website here after. We looked at large groups as a travel demographic because in the market there are only 139 homes total that can sleep up to 16 people or sleep 16 people, which means for a market that has well over 10,000 listings, we are competing at that point with less than 1% of the market. The head ratio. So this comes into play when we go into Airbnb and we start to select the number of guests. This allows us to then see how many listings exist in the market with that can sleep up to 16 people. Some of the other amenities that are listed here allow you to then go in and select while you're there pets. So let's go into the filter and say, okay, if we have a family of 16 that's traveling with pets, when they go in to select those filters, how many homes then exist in the market, right? Who am I now competing with? If we look at kid-friendly amenities, because again, if we go back to our travel demographics, is it possible for a large family to travel with young kids? And is it possible for a large family to travel with pets? So each of those filterable items, we want to understand what exists in the market. And then that helps us determine gaps. So the example I'll show you, once we put in those filters in this market against this specific gap in the market, you'll see the numbers significantly dwindle down. And then what that leaves us with is where we compete in the market. And then that's when we come back and say, hey, here's what value our place holds in this specific market, right? Based on what it offers against the gaps that were found. And I'll go over here to the right. This column on the right is called unique value. When you have unique value, you're typically competing with less than 1% of the market for what you offer. And you'll see here, I'll highlight large groups. Again, I gave some metrics based on the market we were looking at in Houston. And some of these things are no-brainers, right? In most neighborhoods, a pool and a spa, unless you're in South Florida, it's pretty rare. So you'll compete with less than 1% of the market with those amenities offered. EV chargers are becoming huge, and then PeerSpace that I've got listed here. So when you offer some of these other amenities, you get yourself into unique value territory. And I always say that at the end of the day, if you can get to offering unique value in the market and competing with less than 1% of the market, then you're gonna, without a doubt, based on my experience, position your units to do well in the market. So I'm gonna reshare another screen here, and I'm gonna walk back through exactly what I was talking about. So right now I've got up in Houston, Texas, and I've added 16 guests to the guest register here. But let's just go back here for a second, and then I'm just going to search in Houston, and it gives me an enormous amount of stays here, right? Mm-hmm. And now I'm going to go in and add, let's just say 14 guests. So I have 214 stays for homes that offer that can sleep 14 guests. To 16, that goes down to 139. Again, now we're competing with less than 1% of the market. So we're already in unique value territory. So now we go back to our traveler demographic examples. And remember, everything that's in a traveler demographic example here in our data sheet exists as something that can be checked off inside of Airbnb, and that's key to understand. So it's not a guessing game here, but if we offer self check-in and the kid-friendly amenities that we need, and then let's go to pets was the other thing that we noted, and then there we go. We're down to 6 homes, and guess who this one belongs to? This is our newest Airbnb in Houston, right? Interior designer's on site right now. She'll be finishing it up Friday for photos. So the listing's bare as it is, but we've taken almost 7 reservations against the duplex, meaning both units booked at once. Understanding the gaps that existed in the market then allowed us to position the home to compete. And then once we added the additional filters in, we're only competing with 6 homes for that specific traveler demographic, right? So what are your odds now of being booked when you're competing with 6 versus 6,000, right? So when we talk about offering value in the market, that's simply it, right? It is understanding your traveler demographics, understanding what they need, strictly based on the amenities that are offered inside of Airbnb. You don't have to look anywhere outside of Airbnb to understand and find those gaps that exist. And then where you can segment out to offer unique value, then you put yourself in a unique place in any market that you're operating.
Nice. Nice. No, it's really good. I think the first time I saw this described, I actually went and talked with a couple of my people, and we did a similar exercise and found a unit that was going for like $1,000 a night with barely any pictures, just by filtering down amenities. Because you basically become your own competition. you basically become your own competition when you
Right, and that's the goal, right? To be one of a few in the market versus one of everybody else, and where you can get to that, then it starts to eliminate the questions about where you stand in the market. And another important thing, just for everybody to understand, the reason the guest avatar travel demographics is so important is because they, in my opinion, right, they signal economic change. And if we use Disney World for an example, you'll have a lot of people that want to go to Orlando for the thing that actually exists, but not for the people that travel to Disney World. And what we do know is that the traveler demographic to Disney World in 1990 is significantly different than it is today, right? Disney World is Disney World. So when we step back and we understand that, where should you place value on the demographic or the actual place? Because if the place isn't going to change, it's not going to help you understand economic changes. The people will.
Yeah.
So that's why I understand that travel demographics in any area is key. And it's the first point that everyone, when doing their research, should seek to understand.
Nice. So you mentioned that you have about 140 homes under management. Can you tell us a little bit about what your systems are like? Are you up at night answering 140, texts from people inquiring about your units? Obviously, I'm being tongue in cheek here.
Yes, I answer every last single one of them. But no, nowadays we we have a strong team that consists of our operations guy. We've got a number of experienced short-term rental hosts that we bring in to help manage some of our units, especially in investor-specific portfolios. And then for everything else, we've got a team of 6 virtual assistants that are broken up by region, and then we have one that's dedicated to customer relations. So they handle everything from guest complaints, any and anything that needs to be escalated to Airbnb.
Nice, nice, nice. So is it just that one person that's actually on the Airbnb, app, for example, answering guest questions and things, or is it all 6 of them and then that one just handles customer service?
Right. So if the VA that's in the West region, if she has issues that then need to be escalated, she'll feed that to the lead VA.
Okay.
And she will take that, and then she will start to either interact with the guest or escalate to Airbnb or whatever's needed. And then one of the most important things that come out of this is that we receive EOD, or end of the day report, that summarizes everything that happened across each listing. And then, we've got it color coded to where any issue that remains unresolved is one color. Any issue that needs our approval is another color. So we take a quick look at that every night, and then we set priorities for the next day based on those end of the day reports. But it helps us with efficiency from a day-to-day operational standpoint.
Nice, nice. And you briefly there mentioned your investor pool. So can you talk a little bit about how you got into getting other investors on board and what that operation looks like, even for those who are listening to potentially invest in a turnkey arbitrage property?
Yeah, so that's pretty interesting. And I like to think about at least, where we are today with offering turnkey investments back about 2 years ago, where the initial thought came around because I was watching an infomercial. It may have been on Instagram or somewhere, but it was like turnkey real estate properties, like we do it all for you. And then it hit me and I said, every market develops at some point a turnkey solution, right? Mm-hmm. And 2 years ago, there was nothing like that existed, at least at large in some capacity with Airbnb. So we started off with a small pool of investors as sort of a beta test, and our goal over time was to get this to a point of efficiency and scale where we could launch it concurrently with when Airbnb was going to go public. So it was about 2 years total where we brought in, I want to say, somewhere between 8 to 10 investors, and we brought them in at a low price point, no different than offering a course at a low price just to get some customer feedback, help understand where your gaps are to improve them with the next one. But we started to turn over some of our existing units to investors that wanted to get in. And we started simply just to work through all the mechanics, right? Mm-hmm. How many VAs would be needed, which channel managers will work best for doing this at scale. How do we go about hiring, the right housekeepers, the right handy guys? How many members of each team do we need to for redundancy purposes? So all those things sort of package themselves up over that period of time. And we officially launched our turnkey service in January, and to date we've taken in just this year over 60 turnkey investors into our program, and I'll use that point to segue into exactly what it is. Mm-hmm. So our turnkey program it's essentially a do-it-for-you program where we take all the administrative overhead that's required to get into Airbnb. So in our case, that involves acquisition of the property, which for us means we're master leasing every home or apartment that we bring into the portfolio for 36 months, which then means we get to offer those investments for the same amount of time to investors. And then all of the other administrative requirements that are associated with taking on a property, making sure that it's legal, it's got the correct permits if required, we've done our due diligence in terms of insurance requirements for specific properties, and then all the utilities that need to be set up. So we take care of all of the admin overhead. We then have 4 professional interior design teams currently that are segmented across the country, and as projects come up, they get assigned along with a tech person, and then they do the design for the property, and then the tech install. So they actually go out and do that on site for each property. And then you have all the back end management stuff that's required, right? All of your day-to-day headaches that folks don't want to deal with becomes part of the property management aspect of providing the service. So when you package that up, what you get is a chance for investors to invest
Mm-hmm.
in Airbnb without doing the work, but simply investing through my company into those properties.
Right. So they're not out there hunting for landlords, to say yes. They're not searching Wayfair and Amazon at 3 a.m. and wondering how many bed sheets would be enough for a 3-bedroom house. And definitely not answering any guest questions, because you handle the ongoing management as well, right?
Right. All of the back end management.
Yeah, it's brilliant.
It's all packaged up. So, in most cases, most of our investors are, busy professionals or just investors that are looking to, expand their investment portfolio passively,
Mm-hmm.
or they're just busy, right? We all have 1,440 minutes in a day, and what we do with that time becomes a priority. And I always say there's something for everybody, right? So you've got, a wealth of information out there on YouTube. You've got courses, you've got webinars, you've got coaching programs that exist. But depending on the person and their 1,440 minutes and how much of a priority that is for them, we fit in there somewhere where with the service that we offer to investors.
Very nice, very nice. And if someone's listening to this and is thinking, you know what, I think I want to check that out, I don't want to learn all of this and do it myself, how can they actually find you?
I'm going to throw my banner up here. But we have a text based subscription service. We won't spam you on Monday morning and give you the motivational quote of the week to get you going. It only our investment opportunities go out, but you can text the word turnkey to 202 918 5027. Again, text the word turnkey to 202 918 5027. You'll get an automated message that'll ask you to save the number, save it under Coach Cav, and then someone from our team will be able to personally respond to you. And then what happens once you're in the Turnkey text community, as new investment opportunities come available, you'll receive a teaser in some cases or a link that'll allow you to download the investment package to take a look at all of our current offerings.
Nice. Yeah, the last one was the one in Hampton that you said was gone in like 5 minutes. That was the last text I got.
It literally took 5 minutes.
Wow.
To for that property, and that becomes, in this case, the home was brand new, less than a year old, a Navy family that received PCS orders. So once we got the property under contract, we put a teaser out. I think we had about 62 inquiries came back for it, and within 5 minutes of the actual investment packet going out, we had an investor pick up the phone call and secure the property.
Nice. Nice, nice. Now, before we wrap this up, I'd like to kind of touch on your unique homes and the other side of your portfolio, which is like the RVs that you mentioned. I think you mentioned some tiny homes, glamping spaces. Can you tell us a little bit about those?
Yeah, so those get us back into the sharing economy, and at least with a tiny home for starters. I know you've probably seen it in most others, but if you go onto Airbnb's homepage, you will not see the single family home in Houston, Texas, or the apartment that somebody occupies and does Airbnb out of Panama City Beach, Florida. What you see is a number of unique stays, right? So for anybody out there that hasn't paid attention to that, I would you to look at that, because that signals, in my opinion, where Airbnb's priorities are and where they think the future of their company is going with unique stays. And we looked at some data a couple months ago, and unique stays in Airbnb over the last 2 years have jumped almost 300%. And you've got everything out there from tents that are mountainside to old buses that were reconstructed. You've got glamping tents, you've got tiny homes, tree houses, and a number of other unique stays that are out there. So understanding that, we sought to get a better understanding by simply just going in and getting in on a unique stay. Now, this is a little off topic, but I want to tell you at least how that deal came about with a homeowner out in Denver that we signed a multi property. And over the course of a week, the back and forth conversations, talking about insurance and other things, just casual conversation, she mentioned that they were looking to get rid of or potentially sell their tiny home. So of course, being an investor, my ears perked, and I immediately asked, was she open to owner financing with a 24-month balloon on the tiny home? She said, sure, we're not in a rush for cash. And within 48 hours, the deal was done. So we walked away with a single family home that's doing very well in Denver, North Denver, and the tiny home. But that was the impetus behind starting to look for unique stays. The other side with the RVs, that was born of the pandemic. And the thing I'll tell you about RVs is that they are not common amongst short-term rental investors, because a lot of us, just don't grow up with RVs, and we just don't live life around RVs. So the concept of investing in our RVs, it's not near and dear to us. But what I'll tell you and everybody else that's out there is that if you haven't thought about it, give it some thought. And what we do know, and what we came to understand last year when we purchased our first 37-footer Class A rig, was the pandemic brought about a different travel demographic. The staycation traveler not only stayed close in Airbnbs, but they also rented RVs to take trips out west, right? In our case, because our RVs on the East Coast, but families were going on 30-day trips across the country just to get away from the world, being able to work remotely from an RV while in the Grand Canyon and enjoying life. So understanding the changes that led us to getting into the RV market, and the RV, or at least the first one, has done very well. It's been on the road just about 3 weeks every month since acquisition. We keep it down for maintenance at least 1 week a month. But it's provided us with a unique look into not only that market, but also the RV market's diversification, which isn't well understood, right? And I'll give you an example here where the Super Bowl this year was in Tampa, Raymond James Stadium. We were still largely, in a pandemic. And what's going on at the Super Bowl, right? You've got players, coaches, families that all need to make sure they're staying safe. So there was a lot of COVID testing going on during the Super Bowl. And here speaks to the diversification of an RV that you just can't get in any other type of rental. We had a medical lab company that was hired, right, to plant themselves at Raymond James Stadium and provide COVID testing to football players, family members, anyone that needed one, basically, that was in and out of the stadium during that week. But they rented for 2 weeks at almost $16,000 for those 2 weeks. I know it's pretty laughable.
Wow. Wait, how much is an RV? I've never looked into
but
RVs.
When we think about that, if we step back and we think about that, it depends. On the high end, you can pay up to $250 or so for a real luxury model. Ours was about $113.
Okay.
It's a Class A 37-foot door model that sleeps up to 10. And we've got it outfitted the same way, right? With kid-friendly amenities, also and pet-friendly amenities, just because. But the diversification of RVs and the travel to demographics, right, that rent RVs, because there's a lot of hype about Turo in the car space, but I challenge numbers and our long-term gains with any Turo host. And I guarantee you it take a Turo host with a fleet of vehicles months to do what we did in just a couple months or a couple weeks with one RV.
Oh. Now,
because the RV, not only did it go out to the medical company, but it's also went out to Triple Crown races, the Preakness, the Kentucky Derby. It was rented by corporations for those events. So it's provided us a wealth of not only knowledge within the RV renting industry, but also just another resource to expand our sharing economy portfolio.
Interesting. Now
that does very well. So with that, we purchased a Class C here just a little bit over a month and a half ago.
You purchased a what?
Class C RV. So it's a smaller
one. Right. Yeah, I know zero when it comes to RVs. I don't think I've ever stepped foot in one. So that's a whole masterclass for me right now.
Time to start looking.
Yeah. Oh, you better believe it. You better believe I now see RVs. After I heard you mention RVs somewhere, now I noticed them. Previously, but where are you listing the RVs though?
Two sites primarily. On Outdoorsy,
okay.
Outdoor SY, and RV Share, Romeo Victor Share. It's also listed on Airbnb, but under unique stays, but it doesn't garner hardly any traffic
on there.
Airbnb is just not the place typical RV travelers go to look for stays.
Interesting. And the tiny home, how's that doing?
It's doing well. It's still out in the Denver, Colorado area. We are actually getting ready to take on another property in Olympia, Washington, that sits on about 2 acres of land. We're going to move it to that property that we're going to master lease and park it there for a couple years. But I'm always excited about the notion of the tiny home. One, because it's on wheels, so it's pretty unique, and then two, having it as sort of an ADU, an accessory dwelling unit, that can be attached to anything really, gives us a unique ability to position it anywhere across the country if the numbers support it.
Yeah. And I guess now we can just close this out with just like big picture thoughts. Why master lease? Why not just buy?
Well, I think it's pretty simple. We don't have infinite credit and infinite credit resources, and the master lease model allows you to not only leverage, right, which is the most important, business term in my opinion, but monetize or scale and then monetize properties. And the other side of this too becomes the tax conversation, which I hardly talk about publicly because I'm not a CPA, but we've done enough and we've saved enough through taxes to understand that the arbitrage model within short-term rentals, if used correctly as a tax strategy, can be leveraged simply because in most cases with each arbitrage deal, we're spending a ton of money to furnish places and on vendor costs and everything that's associated with startup costs. And then everything else that we spend over the course of that year gets piled on. And all that goes into the loss column filed on Schedule C, which then helps reduce your tax liability. Mm-hmm. So when we understand that and we look at, buying on one hand, it's tax advantages versus rental arbitrage on the other hand, and, your ability to leverage homes, scale quicker, and then also leverage from a tax standpoint and reduce your tax liability, then I think it becomes a pretty easy decision to make.
Yeah. Wow. Thank you so much, Alvin. I mean, this has been totally mind-opening. I mean, I sit here all the time and just chat with people, and then each time I get up, I'm like, ooh, that was quite some good food for thought. And as long as you're willing and to just kind of think outside of the traditional, box, there are so many opportunities that do exist. There's one other thing that you do, the duo technique, which I think that you kind of touched on, where you put together two units and offer them up as one. I mean, we could definitely go on forever.
Yeah,
that are lasting.
That's one. I like to say it's a rather unique aspect of what we do. But conceptually, that came about by thinking about a basketball team or football team that's traveling to Boston or Denver. They're traveling with 40 plus people and they're going to book a hotel, right? They will potentially be spread across 3 different hotels, and let's just say those 3 different hotels are within a 5-mile radius. Mm-hmm. If we understand that from a travel demographic standpoint, and then we just say, hey, you know what? The hotel is just there to provide the accommodation. Even though the places are 3 miles apart, they're just providing the accommodation, and because the demographic exists, right, they then get a chance to win the prize, as I call it, right? So when we thought about that, we simply sought to do the same. So in one example, or at least the most riskiest or robust example, Denver, Colorado, we have a home downtown Denver in the Santa Fe Arts District, and we have a home in North Denver They're 7 miles apart. They were built out with a very intentful purpose, one to sleep 6 and the other to sleep 10, so that in the market we can combine the two houses, market them obviously different because of the geographical differences. But at the end of the day, again, we're thinking like the hotel, where we're just providing the accommodation. And because the demand is there due to the location and the supply is relatively low, when we did the analysis inside of Airbnb, again, we're competing with, less than 1% of the market against large traveler groups. So when we do get bookings at over $1,000 a night, then, we say, okay, well, job well done.
Yeah.
Right. But
yeah.
we look at that in any market. Every market we go into, that becomes the goal to build out in some capacity a dual listing.
It's a really
and
neat,
in some cases we combine different investors together.
That's awesome. That's awesome. Wow. Thank you so much, Alvin, for really just taking out the time and being so generous with your words of wisdom and experience and expertise. Again, I think your website is Your Space STR. Is that right?
Yes. Your Space, www.yourspacestr.com.
So guys, if you're looking for a turnkey opportunity, you definitely want to get on that text list, because you have some really interesting deals that pop up. I love seeing those come up. Thanks so much again.
Awesome. Well, thank you, and hopefully that was of some value to you and your listeners.
My pleasure. Thank you.